Good morning, everyone. On behalf of the Vetiva Capital Management Limited and Frontier Africa Reports, I welcome you to the Vetiva breakfast meeting today. Today, we'll be hearing from our equity and fixed income analysts. They'll be speaking to us on the activities of the past week in those markets, and they'll also tell us what to expect going forward into this week. After that, we'll also get an update from our banking analyst, and he'll be taking us through Stanbic's Q1 2021 financial performance. Following that, we'll also hear from Temple Ashaju of Frontier Africa Reports on updates from the Pan-African markets. We would like everyone to know that this meeting is being recorded and is also being broadcast live on Facebook. Also, the recording may be shared with third-party listeners. Also, the meeting is set to last for 30 minutes only, and that would include Q&A. So if you're unable to get to your questions in the 30 minutes as stated, please reach out to us with any questions or inquiries at research@vetiva.com. So we'll be getting to the equity markets in a minute, but before we get to that, we would like to ask everyone to please take part in this poll that is on the screen right now. Thank you. So from now, we can start with the equity markets. Good morning, Shim.
Good morning, Chima, and good morning, everyone. And welcome to a new week. Markets across West of Ghana, the benchmark index ended the week on a positive note with a 28 bips appreciation in the index points. The gain represents a 1.83% week-on-week gain, with Guinness, Ghana, and Cow Bank leading the gainers chart with a 10 and 5% positive close, respectively. Though volume and value of trade declined 82% and 75% respectively, the market breadth was positive with 4 gainers and no loser in the session. Year-to-date return of the market remains well in the green at 20.72%. So we believe going into the week, we expect mixed markets, though with a more positive tilt, just to continue the positive sessions we've seen from last week, but we might just see some mixed sessions. So moving on, we'll move to Brvm. The index also ended the session in the green to cement a generally positive week with all trading days closing higher. We saw positive sessions with 60% improvement in market turnover and a positive market breadth with 15 gainers and 12 losers. In that market, Nestle Cote d'Ivoire led the gainers chart with a 7.46% gain to cement a 22 bips daily gain and a 2.7% weekly gain. So generally positive session in that market. April has been generally positive with a 5.59 return to reverse the negative close of over 3% that we saw in March to a positive 1.95% year-to-date close as at Friday. So I think sometime at the end of March, the market was down about 3.7%. And now with the positive gains we've seen so far in April, market is returned to the Brvm index has returned to positive 1.95%. We expect positive sentiment to continue into the new week on the back of decent earnings release, though we might see some profit taking in names that have seen decent appreciation in the last 5 to 10 trading sessions. Moving to Nigeria, the ASI ended the week in the green with a 43 bips upward close. The gain consolidated the gains. The 43 bips consolidated the gains we had seen in the last two sessions to take the market to a 1.27% weekly close. In the session, all sectors closed higher, with the consumer goods leading the pack with a 94 bips gain on the back of gains in down sugar. Other market movers were Stanbic with 870 bips gain, as well as Zenith and UBA, amongst others. Volume and value traded in that market also improved by 26 and 15% respectively, while the 3.33 times market breadth cemented a generally positive session. So the banking sector continued to dominate activity, as they accounted for about 70% of market turnover. Stanbic was lifted in the session by about 8.7%, prior to the release of its Q1 2021 results, where it reported a 10% decline in top line and 19% decline in bottom line, which I believe our banking analysts will be able to shed more light on that. We'll watch the counter in today's session to gauge investors' reaction. Basically, seeing that we didn't see any negative reaction to the GT Bank's result, which also reported decline in bottom line. So just trying to find out if investors generally are not bothered about this Q1 result, or we'll just see some level of reaction in today's session for Stanbic. So going into the week, we expect Q1 earnings release to continue to drive market direction as investors look out for better than expected results in any of the counters that will be releasing their results. Also, with the yield in the fixed income space for most of the 1-year paper around 8% and going higher, investors will likely continue to underweight equities in the short term, while the discerning investors spread their risk into equities with strong fundamentals. Overall, we expect slow starts and a mixed outcome for the new week. Thank you very much. That'll be it for equities market.
Thank you very much. Next, we'll move to Joshua Odebisi, the banking analyst, as he covers the Q1 21 financial performance of Stanbic.
Thank you, Chima. Good morning, everyone. So like Sean earlier mentioned, Stanbic IBTC Holdings released their Q1 21 results. They actually reported a 26% year-on-year decline in gross earnings to about 45.7 billion. This came as a result of a 23% drop in interest income to 21 billion from about 27 billion in the same period in 2020. They also reported a 27% drop in non-interest revenue to 24.7 billion from almost 34 billion in the same period in 2020. On the positive side, they did report a net positive for provisions of about 155 million, which is up from a negative figure of 1.9 billion in the same period in 2020. Overall, the OPEX was up by about 10%, which was fairly tame. However, this resulted in a profit before tax of about 12.1 billion for the period, which is 50% down year on year, and a PAT figure of about 11.2 billion, which is about 45% down year on year. This came despite a 15% increase in loans and advances from the Q4 period to about 730 billion, and total assets were up about 3% from the same period to about 2.5 trillion overall. We will have a more detailed report out later today, but that will cover everything for Stanbic. Thank you.
Thank you very much, Joshua. Next, we'll move to Omarige to cover the fixed income market. Good morning, Omarige.
Good morning, Chima. Good morning, everybody. I'll start with the money market. The money market is still very liquid. Yesterday, market opened around 98.76 billion short, taking in the CBN reverse repos. After adjusting for the 10-odd repos, the market was about 109.16 billion short. The settlement of the bond auction of about 158 billion drove liquidity further south to an estimated 267 billion short. The persistent tightness has kept rates high, with Friday's interbank rate around 15%, driving many market players to the CBN discount window at 12.5% levels. The market is expectant for FAC postings today, an estimated 326 billion, to ease the current strained liquidity. So our expectation for today is that the money market will trade at lower levels this week as FAC inflows and other CBN credits boost system liquidity. Moving on to the FS market, the parallel market remains stable on Friday to trade around 485 naira to $1, while the earning window traded at a high of 436.40 naira to $1, closing at 410 naira to $1. So we saw significant decline in turnover on Friday as it closed at $32.01 million, coming from the $108.04 million recorded on Thursday. We expect the Naira to continue to hover around these levels in the interim in the absence of any significant inflow of FS into the system. Moving on to the T-bills market. The T-bills market closed last week on a muted note, with more demand seen on the NTB maturities than the OMO papers, in spite of the persistent demand weakness in the NTB segment, particularly on the long-dated NTBs. Few trades were consummated across the curve due to the shortness of cash in the system. Overall, rate closed 87 basis points lower on the OMO papers and 14 basis points lower on an average across the benchmark in the NTB papers. So our expectation for today is that the T-bills market will trade on a bearish note prior to the auction as players offload their current positions with the hope of getting higher rates at the NTB auction. I'll conclude with the bonds market. The bonds market concluded last week on a very active note as anticipated coupon credit spurred buy-side interest across the benchmark curve. As a result of the improved demand weakness in the bond space, we saw a slight moderation in rate across the curve. The 2049 lost about 10 basis points to trade around 13.77%, while the 2027 and the 2029 lost about 12 basis points relative to Thursday's closing levels. Our expectation for today is that the market will remain bearish in the interim on the back of the strained system liquidity. That concludes the presentation for fixed income. Thank you very much.
Thank you very much, Omarige. Finally, we will be moving on to our media partners and at Frontier Africa Reports. Today, we have with us Temple Ashaju. Good morning, Temple.
Good morning. So in Ethiopia, we understand that they've signed an agreement. They signed that on Friday of around $907 million with the World Bank to help them fight COVID-19 impacts on businesses, on their electricity challenges as well, and the electricity challenges that they are having. They're targeting small and medium businesses that have been heavily challenged at this time with the sum of about $207 million, which is a grant, and $700 million, which is a loan from the World Bank. and they intend to also address their challenges with the electricity challenges that they have. That we expect to come through soon, just as some other country, Tunisia, is also making a move to take a loan from the IMF. The Prime Minister, Hichem Mechichi, has actually written to Kristalina Georgieva of IMF. They've acknowledged the letter. We understand that on May the 3rd, the Prime Minister, that's Mechichi, Prime Minister of Tunisia, will be heading to Washington to commence talk on the necessity of this, or the reason why they need to get this loan. We understand that IMF has also acknowledged it, and they are looking forward to assigning a team to Tunisia to make the fund accessible for them. Mauritius Bank injected some $60 million into Senegal's electrification sector. So this revs up the interest of some investors in electricity across Africa again. And let's hope that this brings about some difference. In the western part of Africa, and southern part of Africa, we know that Angola has announced a round of licensing for the oil wells in that country. That is to commence on April the 30th and to end on June the 10th or thereabouts. They're hoping that they'll receive proposals between now and June the 9th. And then these proposals will then be opened subsequently on 10th of June. Then the evaluation will follow, and then awards, the negotiation, and of course the signing of agreements. We know that today the AFCFTA Secretariat is holding its first meeting of dispute settlements. Of course, we know that one of the key elements of the agreements is the dispute settlement body protocol. So that will commence today and be followed on I think on the 28th of April by a press briefing, but it's all going to be happening virtually. In southern part of Africa, we understand that Mango Air, which is a state-funded airline, is to be granted any moment from now because they've run out of funds and salaries have not been paid for a while. Of course, South African Airways is the parent body of Mango Airlines, and the newly appointed interim board has decided to embark on that decision because of the funds, because of lack of fund at this point. They are paying more attention to South African Airways, which will commence flying again, which will resume flying in August of this year. I think these are the headlines we have for now. Thank you for listening.
Thank you very much, Temple. So we will be heading over to the Q&A segment, but before we get to that, we'd just like to take stock of our polling results. So we can see from the results on the screen that out of our participants, 69% voted. And we can see from the results that the most preferred investment option from this pool remains stocks, although Eurobonds come in at a very close second. Next, we have T-bills and others. We can see that topping or at the bottom of the charts remain cryptocurrencies and agribusiness. Okay, so next we're moving on to the Q&A segment of this meeting. If you have any question, please, if you're joining us on Zoom, you can send in your questions using any of the chat boxes available, or you can raise a hand if you'd prefer to speak. If you're joining us on Facebook, we'd like you to send in your questions in the comment section. I see that Sean has his hand raised. Please go ahead, Sean.
All right, thank you, Chima. For the opportunity. So my question will be to the banking analyst. So far we've seen mixed results.
Apologies, Sean. We are unable to. Hello, Sean.
For the use of the year result. Whoa, be looking at. Can I go ahead?
We are unable to really hear you properly. I think your network. But please start again.
All right, let me just
Yes, this is better.
let me
Sean, if you prefer to type your questions in the chat box.
So I said we have been released so far.
Okay, I think we'll just give Sean 2 minutes to type his question in the chat box. Thank you. So Sean says we have seen mixed Q1 results so far. Where has the pressure points for the ones that reported a decline? Are you referring to the banking sector results?
Yes, please.
Okay, so Joshua will take your question now.
All right, thank you, Chima. Thank you, Sean, for that question. Based on what we've seen so far, most of the pressure points have come significantly on the interest income lines. We've seen both GT and Stanbic reports pretty heavy declines in interest income, although they also reported some declines in interest expense as well, which sort of helped to moderate the net interest income declines. But overall, interest income, interest expense has all been down. Now, this we have attributed it to lower yields from loans and advances. But overall, what we are seeing is that we assumed that there would be all the moderations that we would see would come at some point during either Q2, Q3 last year. But obviously, a lot of loans and advances are still not yielding as high as they were compared to the same period last year. Now, there are still some causes for optimism. Fees and commission revenue is up almost universally, although it's a little bit mixed with regards to trading. Stanbic reported a pretty significant decline in trading revenue to about 3.2 billion. However, there's still the possibility of further FX revaluation gains. And as the yield environment continues to evolve, there's still potential to see an increase in trading revenue as the year goes on. And also, as I said before, Stanbic did report that they got a net gain from impairments, whereas GT did still see some impairments, but it was not the increase was not as big as we had assumed. So there's still some causes for optimism going forward for the rest of the year. Yeah, but overall, the biggest pressure point is on interest income. Even though we've seen loans and advances increase, like I mentioned, Stanbic reported a 15% improvement in loans and advances. However, this did not translate to an increase in interest income, but we do expect the situation to improve as the year goes on. Thank you.
Thank you, Joshua and Chim, and I hope that answers your question, Chim. We can take one more question. However, if we do not have any other question, we have come to the end of the session today. We'd also encourage everyone would encourage our audience to send us questions at research@vetiva.com if we're unable to take your question today, and if you have any other question after this meeting. We thank everyone for joining us today. We hope that you have a wonderful day ahead. Thank you.